Good afternoon, folks. Thank you for listening today. Today I'm going to talk about Fibonacci, just how to draw it in. Some people are still struggling how to draw Fibonacci's in and how to line them up with support and resistance. So first of all, I'm looking at the Euro USD time chart at the moment, the daily chart. So there's of course numerous of different ways to draw Fibonacci in. We could look at the big swings of the market, the major turning points. When we talk about the big swings, we talk about every single time the market has made a major turning point. So this level up here, this high point, is the latest turning point that the market made. This low is the last major turning point up that the market made. This high up here, that's the previous extreme turning point that the market made. So we could just focus on the extreme areas, and that's what the long-term traders do, especially on the daily chart, weekly and monthly chart. They look at the extreme turns of the market. So as I look at this here, if I wanted to see where the long-term sell level is, I would need to identify where was the last major turning down point. And of course, what's the lowest current low since then? So this, of course, was my previous downturn area. So this previous downturn area, major turning point for down, will become my A. I'll just put an A there. Then, of course, the lowest low since then will be my B. Okay. So I simply connect the highest point in A to the lowest point in B. Now I can see all the Fibonacci levels that are approaching. The 32.8 is usually not that powerful. The 50 to the 61.8 becomes now more powerful, and of course very powerful is the 78.86 area. So if I wanted to see if there is any major areas of support or resistance on them, I simply just put a horizontal line over my Fibonacci level, and I can do that on all the major ones, the four major ones that we like to look at. So now on the 61.8, I can clearly see that there was a major support before. Price fell down, hit this area in the past, and then moved up. Similarly, on the 50 level, I could also see in the past over there, price hit the same price level, used it as support. So the next time the price gets to this area, there could be another trade on. Price could reject from this area again. So obviously when price gets there, we will look for candle info and divergence. Okay, so we've got a lot of previous lessons on candle info and divergence. Just go look at our library and you will see. Okay, and we will of course have more lessons about it in the future. So all four of these levels become interesting. The 78 area as well, but also the 86 level. Look at the 86 level. Okay, we could see there was a divergence set up on top of the 86 level in the past. So this 86 level is also very attractive. As we know, the 61.8 is known as the golden ratio. It's that magical Fibonacci ratio that we see almost in everything, that is repeated throughout nature, the pyramids conform to this ratio, the width divided by the length. It's the same principle that governs the way that plants grow, for instance. So this is a very important level, the 61.8 area. So definitely I can see a very clear support, potentially resistance now when price gets there again. And then the 86 and 78 level is known as the bankers level, because that's where the banks like to trade from. Because if the market does from this area go and make a lower low again, the profit is usually quite huge compared to the risk you are taking. So in this instance, you would have made 1,400 pips almost if you took a trade from here and stayed in all the way until she goes for a lower low. Okay, that's why this is called the bankers level. They like those big risk to reward ratios. So if I now was looking for a buy, imagine I was viewing this area down here as a major buying point. where price is now on the daily as a potential long-term buy. Okay. Now I can once again, I look at my major turning points. Where was my major turning point for up? It was of course this point here. Where is the higher high since then? The highest high since then? It's here. So the major turning point from where it came from is my A. Okay, my A down here. My highest high from the last low is my B. That's what we're putting right up here. So now if I connect the A to the B, okay, can see that currently the price is at a 86 Fibonacci level. Now if I just drop myself a horizontal line down at this level and make it bigger, I can just go study back on this line to see what has price done here before. Okay, now over here we can see there it was support, it was resistance a little bit over here, and there it was support again. It doesn't stand out so well. Here it stands out quite well as support before, but it didn't really stick out as resistance so much. So it's not such a great polarity area. Polarity area, of course, is where support turns into resistance, or where resistance has turned into support. Okay, so it may be not, I don't see it so clearly there, so it's not such a great level. If the support turned resistance or the resistance turned support was more clear, then it would make it a better level. Sorry, I'm jumping around a bit here. Let me just make it smaller. This 61.8 area here, although it failed, okay, look at this. Here where price fell through, it failed as support, but it held up as resistance. Now that's what we call polarity. Now look back at this level in the past, how it acted like support. And then it acted like resistance over here. So those are always more powerful areas where you can see more recently in the past there was support, and now potentially it can be resistance. Okay. So let's go to the smaller time frames now. Excuse that. Okay, smaller time frames. Now we're going to just look at the latest move the market has made when we go down to our smallest time frames. This we normally do for intraday trading. Now, as we can see, the market just made a lower low. That's the lower high where it came from. Now, I can also put a zigzag in if I was unsure where these areas are. So there's the previous high where the market came from, and there's the lowest low that it made. So A, B, okay, that's my A, that's my B, and now I can see some Fibonacci levels appear. Now immediately the 61.8 area is attractive because there we had support, and now potentially it can act like resistance. Also on the 78 level, I can see that in the past, not too long ago, there it acted like support. Okay, there it acted like support. It previously bounced off here before. So if this level fails, the 78 level will be the next area to focus on. Okay, so that is just looking at the latest swing that the market has made. Now I'm going to go to a more bullish example. Let's go to the dollar yen. As we know, it's been very bullish of late. So from a long-term trading perspective, I would look at the major turning points. So I'd have to page a bit back to find the last major turning point here. So maybe I don't need to do it because then that's why we have a weekly chart. So if you need to page back further than what you can see, you just go to your weekly chart. But I can see something on my monthly chart. I can look at the latest swing on the monthly chart. Okay, this low here to this high is the latest swing. So these will also, because it's a daily chart, you will still review these as a long-term level, still far away. This B needs to come down as well before it's a proper B. It's still busy pumping up, as we can see, but we'll just use it as a B for now. It needs to have stopped at least for it to be a B. And if it continues going higher, of course, this will move up with it. Okay, so now what am I seeing? The 61.8 area. Okay, this is just there we have potential support that could turn into resistance, or resistance that could turn into support. So maybe the 78 Fibonacci level is a better. That will be a better level. So if price falls back here, we could say this area of resistance could now potentially be acting like support. Okay, so let's look at the weekly chart. Let's look at the latest swing, or the biggest swing. What's the biggest swing the market has made? The biggest swing the market has made is from down here, from this level down here. So this will be my A. Okay, down here this level is my A, and up here my level is B. So another way I can look for long-term buy levels. Okay, now just remember, price might never ever reach these areas, but if they do, then they can become potential trading areas. Now on the weekly and monthly chart, I believe all Fibonacci levels are important. They definitely have a big effect on these two time frames, the weekly and the monthly. So over here we can see some serious resistance in the past, okay, and some support. So it's very, very probable that this 102 area, if reached one day, will act like support again. Okay. Then of course we could also be looking to sell. Okay, now for long-term selling, we can look at the major turning points. That's there for A, down here for B. So now I'll swap my A and my B around. Okay, now A to the B, all the way down there, bang. Oh, interesting, prices hit the Fibonacci level 61.8 at the moment. Now let's have a look at the area. We can obviously see in the past here there's definitely been lots of strife for this area, for this price in the past. So there could be some resistance here. Let's have a look at the daily chart now. But right now, as we can see, there's no turning around. So bear in mind, this is potentially a long-term sell area that we're facing right now, but the information is not bearish at all. We have no candle info. There's a bit of divergence happening here, okay, but it's very bullish divergence. Of course, normally we would like to see divergence to be a little bit more like that, rather than like that, which is currently happening. Price is just doing that, rather than making two definite points that we can say, okay, there's the divergence over there. Okay, so we need some proper more divergence before we will view this as a long-term sell. So this is still a while away, a few days away, if we even get there. But now let's look at bullish examples of at the latest swing. If we go to the 1 hour chart, we'll be able to look at the bullish swings from the latest. Now if I'm turn this into a zigzag chart, put my zigzag on. Here we have a little low. Okay, this is a very little low. Yeah, I can of course use it from there if I want. Even this little low here, it's let's go to the 4 hour chart. Looks a bit better from that point there. Now you can use this point to draw up for a fib. You can use that point to draw up for a fib, but this little moves from that point is so small that I'm not going to use it. The more clearer moves are the better ones to use. So this is a proper move. So from here A all the way up to there is B. So now this 50 area, this becomes my 50 Fibonacci level. Okay, looking very good over there. And of course, once again, the 78 area also pretty looking good. Here's resistance there. Here we can see, of course, it created the demand zone. This beautiful candle info down here that pushed. So this is a demand zone, or a supply and demand zone. Also, there's some resistance that could act like support. There's some resistance that could act like support. These were actually the levels on today's newsletter. Obviously price has gone up a little bit now, so it was, I think, 118.90 was what it was this morning. So 10 pips higher is basically what price has gone now, to push it up 10 pips higher. So let's have another look. Let's look at the dollar, the Australian dollar. The 1 hour chart, just going to look at the latest swing. The latest swing, make it bigger, and I can see, of course, there's a lower high to the lower low. That's my A to B. Okay, and I can see, okay, here I've got some Fibonacci levels over here. Now I would actually not use this. This is just, it's too small. This little move is too small for me. Okay, so I would rather take it to a bigger move. Now, this is very much valid. What we do when we do this is we're cutting all this little bits of noise out. We're looking at this as an A and that as a B. So this is one move. Okay, because this is, you can see clearly lower high here. Okay, we've got a false break with this level over there. So this is quite an important level. And of course, this is the latest lowest low. Now the 61.8 area becomes very attractive because there we can see support that could act like resistance. And of course, the 78 level also over here and over there and over there has previous support that could act like resistance. And of course, this whole area acts like a supply and a demand zone. So both these areas then become attractive options. Okay, so that's looking at it from the latest swing. Let's quickly look at it from a big swing. So now daily chart, make it as small as possible. Looking at the last major turning point, so the major turning point on this chart. I could use that as a major turning point. Okay, and of course I could use any one of these highs over here. Now I won't use any of these highs because that's why I've got a weekly chart. So that high I can then use, or a monthly chart. Okay, from the monthly chart we will use from here to there as a bullish one. And on the weekly chart we will use that as our extreme high to our extreme low for ABC going down. So therefore on the daily chart I don't really need to go look at any of these other points. This major turning point down could be my A and that could be my B. So drawing my Fibonacci in. This is also again for long-term trading. Okay, cutting out the big moves. So this whole area up here, this from the 78 to the 100. What do we see here? This whole place is like a supply and demand zone. It went sideways, messy for a while, and then it make a big breakdown. So this whole area is like a supply and demand zone. And then of course if I look once again at my 61.8 level, not the clearest resistance turning into, or support turning into resistance there. The 50, maybe it's a bit clearer. I can see there we had support that could act like resistance. So that 50 Fibonacci level here looks more attractive. So going to the weekly chart. So this is now looking for levels that's even further away. So if they one day get reached, we can use them. A up here, B down there. So now all these Fibonacci levels up here look quite attractive. Every single one I can see support in the past that could act like resistance in the future. Almost every single level here becomes attractive. And remember, this is a weekly chart. On weekly charts, every level becomes important. Also, I can look for buy levels from here. I can look for long-term buy levels from all the way down here. Okay, but that's once again why we have a monthly chart. Go to the monthly chart, make it as small as possible. Now, all the way down here to all the way up there is my A to B. Okay, extreme turning points. Okay, so this 61.8 is very far away, but wow, it will be a good area if it is reached, because there it acted like support, there it acted like resistance. As we can see, the previous 38.2 area had quite a big support before. Look here where it got to the 38 and pushed up by about 800 pips. Now on the scale of the monthly chart, it's not much, but in terms of intraday trading or regular long-term trading, it's massive. It's of course a huge move. So if you check your Fibonacci levels regularly on the monthly and weekly, these become trading opportunities right here. Okay, how does it become trading opportunities? Okay, I'll just draw in this trend line over there, put it a little bit through price like that. Oh wait, I'll just find a better way of doing this. Okay, I just want to make a little point like that there. Okay, go to my 4-hour chart. Now I'm going to look for that area on my 4-hour chart. That's obviously a while ago. You know, there we go. There it is there. So what do I see on my 4-hour chart? Now we're seeing a kind of a head and shoulders pattern. Okay, it's kind of seeing a head and shoulders pattern over there. Okay, so we could have drawn in our line like this, and here on the 4-hour chart where price broke the neck is where we could have entered the trade. Okay, but look at this from there on in. Okay, so you could have traded. This is a more difficult pattern to see, and this was not such a clear head and shoulders. But after that, we had higher highs, higher lows, higher highs, higher lows. So here you would have just been able to trade with a trend. Higher highs, higher lows. Okay, so if you do know that price is turning around from a level, it could give, I mean, this is a counter trend setup. Okay, it got there through an uptrend, through a downtrend. Look at that. Okay, look at that there. That's a downtrend that it eventually broke. So here it crowned. Here it made a high and a low on the other side of this trend line. Crowns, as we talk about in the 3-day course. Okay. So you would then, of course, when it's on those major Fibonacci levels from the higher time frames, you need to go down to your 4-hour chart or daily and start looking for things like this, head and shoulder patterns. Let's just see if we go to a 1-hour chart, if we find something interesting. I'm sure we'll find if we can get there. It's quite a while ago. On our 1-hour chart, we will notice how there would have been a nice uptrend. Okay, now we can't go so far back on our 1-hour chart. But basically on your 1-hour chart, you definitely would have seen after that higher highs and higher lows. So you could have benefited from trading with a bigger time frames trend. Okay guys, so the basics of Fibonacci is you draw your fib from your A, okay, to your B. Okay, you draw your Fibonacci from your A to your B. Okay, always from A to B. Now, if you're looking for sells, your A must be above and your C must be at the bottom. Okay. If you looking for buys, your A must be at the bottom and your C must be on top. So here the market made a lower low and a lower high. Okay. And over here, the market's made a higher high and a higher low. Okay. I'll just do that again. Okay, A, B. The C is the area in between that's why we're drawing the Fibonacci level. Okay. Here the market's made a low, a high, and a higher low. Okay. Obviously our C is the area in between A and B. Okay, so we could be skipping out the major moves, okay, and have our A to B down here. Or we could be looking, when we're looking for buys, skip out all the smaller moves and look for the major turning points only when we're looking for buys. Or we could just, like we have over here, just looking at the latest swings. This is what we do mostly for our intraday trading. Okay, we're looking at these setups, the latest swings. The long-term traders look at these swings, the bigger ones. Okay, and this we would normally do on a daily chart and higher, and this we'll do this on our daily chart as well, but also on our 1-hour and 4-hour charts to look for the latest swings for our intraday setups. Okay, everyone, thank you very much for listening. If you've got any more questions or would like a private mentoring session, please email me at nicholas@forexvarsity.com. That's Nicholas, Nicholas, at forexvarsity.com. Have a lovely day. Bye-bye.